Hey everyone, welcome to another week review. And we have another complicated situation on our hands here because of Friday's strength. Didn't expect it to have such a high breadth. It was another 80 vol. And how is this complicated? Because we have the potential to trigger breakaway momentum on Monday, as explained here by Walter. And we only need to be above 60 decliners, which is very easy. And when breakaway momentum triggers, it's a very powerful uh, breadth thrust, uh, which is followed by at least several months of upside when it triggers. Like even situations like we had in the 60s, 70s, where eventually we went lower, but this is still probably like 2 years of upside. Here again, probably like a year or something. No, still 2 years. And that's kind of it. Probably the only one where we didn't get a lot of upside is here, but still probably like 6 months of upside even here. And if that happens, we have to respect it. Uh, I still think we are due a pullback, and I'm going to talk about the scenario in which we get it and what why I think it's likely to happen on Monday. So first of all, this is clusters. Actually, let's sort by rank. This is clusters. And aside from that SFXL print that I posted, which is 3x pull SPX, which got a print at uh, a local top on the close on Friday, we also have some activity in semis, 3x leverage print, both in 3x bull and 3x bear, which is one at the top obviously for the bull one and one at the bottom for the bear one. We also have some activity in QED, which is 2x bear Nasdaq, and SFXU, which is 3x bear SPX, both at the local bottom. And I keep telling you guys that whenever we get activity and especially synced activity in these bear ETFs or in these leverage ETFs, you have to pay attention whether it's bull or bear, because it doesn't really matter which one it is. They will mirror each other or inversely. And we have quite a bit of activity in a lot of these leverage ETFs on Friday. Plus, on the technical side as well, when we look at the breadth indicators, we are at levels usually consistent with tops. Like for example, here we're almost in the red, and even during bull markets, whenever we get to these levels of overbought, we tend to correct. Problem is if we get a breadth thrust, a bull market will go into overbought and stay into overbought, and this is when we got a breadth thrust as well, and you can see what happened afterwards. Uh, or here, like we went into overbought and pretty much stayed into overbought for another month or so. If we are in a bear market, it has to behave like this, like we tap it and then correct, tap it and then correct relatively quickly. We don't stay at the top for a long amount of time. And the other one is similar as well. Like we don't usually get to this level, and when we do, it's brief, and we should see a correction very, very soon. And I think the potential trigger for this can be the tomorrow's ISM services print, um, because tourism has already been affected for the US, and tourism is a part of the ISM services print. Tourism services are an important part, and if we are already seeing impacts an impact from the Trump rhetoric, especially from Canada and Europe, I think there's a potential we get a negative print for this one. If we get a positive print, almost for sure we get a breakaway momentum triggered. I don't see any reason why the market would go down tomorrow, aside from a scare that recession is actually coming. And services going into negative would be that scare. And in that case, most likely we will not trigger breakaway momentum tomorrow, and we start on our pullback. Now, if we do trigger breakaway momentum, I still think we get a pullback because modern triggers happen more often than not at tops. Then we get a shallow pullback and then we go higher. So this would kind of be the this is until Wednesday. Yeah. So go sideways and then go down. But this is actually a breakaway momentum trigger because if we don't go down tomorrow and don't go down tomorrow big, it will probably trigger and then this is no longer valid. So if we trigger breakaway momentum, most likely it's going to look like this. Uh, it's super shallow and we go to the AV up and turn it into support, something like this. Or we turn the top of the gold candle into support and then we go higher. Maybe we do a W. I can here go sideways a bit and then we go higher. But if we are not to trigger it on Monday, then tomorrow needs to be a very deep red day. And from go something like this. So the scenario changes like this. This even the W thing doesn't really I don't like the W thing, so let's do it like this. Turn A view up, turn this A view up into support, and then we go higher. And this goes away. So we need tomorrow to be a very deep red day, like minus 2%, something like this. This is 4%, so we need maybe this. Go to 556, ideally 550. Uh, and that's kind of the two scenarios. So we want to avoid triggering breakaway momentum. Uh, we want to get a negative print for services. If this doesn't happen, we have to turn tactically bullish because it is what it is. We go with the flow. Finally, we also have this VIX path that I still think is a valid one. I don't count this candle as going to 30, even though we went from basically 24 to 28 because we didn't close. What I'm looking to close there. What I'm looking to see is a multi-day move like this one or like this one. So it's something that the candle goes to that level and we close at that level. Uh, Something like this more that is visible on the chart. That day is not even visible on the chart. I mean, it's visible, but we didn't close there and it wasn't a sustained moving VIX. So I'm looking for a sustained moving VIX back to 30. That, however, does not equate a big drop in SPX. So if we trigger breakaway momentum, I still think this is a valid path and is consistent with what I think how things will play out. Basically, we trigger breakaway momentum. Maybe we go to, I don't know, 21, 20. If that happens, then we still get a spike in VIX, but the market doesn't drop that much while VIX spikes. Like I said, we go maybe to 545 and then we bounce and go higher. And then because we are in a bull market for at least a couple of months, maybe like all of summer, maybe all of this year, we fade volatility and we go to 20 or 18. We go to 18 and then maybe we get that big spike later in the year, depending on things evolve economically and politically. So we have to be prepared for this, and if we get the breath thrust, we have to respect it, and that's kind of the setup. So for the longer term, maybe we go to 650, somewhere between 620 and 650. I'm not sure yet. I'll reevaluate depending on how the week evolves and what happens. But maybe something like this, all of summer, peak somewhere in August or September, do another correction, but new lows is uncertain, but still a pretty large correction here would be very likely. Even if this is like 15%, if we go to 650. But yeah, we'll worry about when we get to it, just as a heads up here. Yeah, hope this helps. I would like to have more clarity, but it is what it is. Have a good one. Bye bye.